Okay, good morning again. Thank you all for joining us. I'm very excited to be here and to kick off this webinar. My name is William Blackmon. I'm the Associate Director of the Consumer Protection Research Initiative at Innovations for Poverty Action. Today, we're really excited to be diving into the experiences of digital finance users in Nigeria, what challenges they're facing, where things are working, and where protection gaps remain. The data that we'll share today is directly from consumers via a survey of over 3,000 individuals conducted by IPA last year. This session is part of our broader effort to make consumers' own voices central to how we design, deliver, and regulate digital financial services. So here's what we're planning to cover in the next hour. I'll spend just a few more minutes sharing a high-level view into the work Innovations for Poverty Action does and our efforts in the financial consumer protection space. Then I'll turn it over to my colleague, Brian Mwesigwa, who will share new data from Nigeria's 2024 Consumer Protection Survey. Next, I'm really excited that we'll get insights from an incredible panel of Nigerian leaders across regulation, industry, and research to reflect on the findings that come out of this survey and how we should respond. Finally, we'll open it up for audience question and answer. Throughout the session, please feel free to make use of Zoom's Q&A feature, which you'll find at the bottom of your screen, either sharing your own questions or voting for others. We will use that system to answer some questions directly via text and select some questions for our speakers to address live. So before we jump into our survey findings from Nigeria, let me just start by situating this work in the broader context of what we do at Innovations for Poverty Action, or IPA. IPA is a global research and policy organization that works to improve the lives of the poor around the globe through the generation of rigorous evidence on what works and what doesn't. We also put this evidence in the hands of policymakers, so decision-making can be informed by high-quality evidence. We have offices in 17 countries across Africa, Latin America, Asia, as you can see here, and have done work in more than 50 countries. We see IPA as playing an important connective role, bringing together key stakeholders needed to conduct high-quality research that delivers impactful results. First, we leverage our network of leading academics from around the world to ensure that the work we do meets our high standards for scientific rigor. Second, we work with funders who, along with our government and private sector partners, provide the resources needed to conduct this important research. Finally, and probably most importantly, we work with government and private sector leaders to identify priority policy questions where better evidence can inform decisions. Beyond playing this coordinating role, IPA has the on-the-ground research infrastructure necessary to work with our government and private sector partners to carry out the research that is deemed to be most important. Our initiative, which is part of IPA's financial inclusion program, is called the Consumer Protection Research Initiative. We aim to answer what is a relatively simple but urgent and important question. What risks do consumers face when using digital financial services, and what can we do about it? We focus on 4 categories of risks that cut across many of the markets where we work: limited pricing transparency, fraud, over-indebtedness, and inadequate complaints and redress mechanisms. So far, we've carried out over 20 research projects across 9 countries using a variety of methods, from surveys and audits to analysis of administrative data and data scraped from social media websites. We see our work fitting into the 3 broad buckets: rigorous evaluations, regulatory partnerships, and creation of public goods. As I mentioned before, we work with leading academics to run impact evaluations, testing the effectiveness of interventions that aim to mitigate consumer protection risks. We also work directly with regulators, including the Central Bank of Nigeria, to strengthen monitoring tools, including work developing supervisory technology or SUP tech solutions. Finally, we provide public goods meant to help a variety of stakeholders understand how consumer risks are changing and evolving. First, we track how financial service prices are changing over time. We'll soon be providing monthly data on key DFS prices across 18 countries. And then today's session focuses on the second major public good, our 10-country consumer protection survey. The goal of these surveys is to generate standardized demand-side data that measures the risks consumers face when using digital financial services. We started this work running surveys in Nigeria, Kenya, Uganda, and Bangladesh in 2020 and 2021. And now we're expanding this effort to 10 countries across Africa and Asia, running 2 waves of data collection, first in 2024 and 2025, and then a follow-up round in 2027. These surveys allow us to hear directly from DFS users about their experiences. What services are they using? What problems are they facing? And where are they dropping off their usage and why? We aim for broad country coverage with an intentional focus on gender and urban-rural balance. All of these results in report and microdata form is open access. If you'd like to take a look, which I would very much encourage you to do so, you can scan the QR code on the screen or visit the link, which I'm sure one of my colleagues will, oh, maybe we can't drop it into the chat. So please scan the QR code or visit bit.ly/IPA-CP-surveys, where you'll find all of our data, including our 2024 report. And now I'd like to turn it over to the esteemed Brian Mwesigwa, who is a senior research manager at IPA Nigeria and who led our consumer protection survey in Nigeria last year and will be highlighting key results from that work now. Brian?
Good morning, everybody. It's a pleasure to be here and join us as we talk through the results from our consumer protection survey. Just give me a second to set up the technology. I hope you can hear me. Great. So like William said, my name is Brian Mwesigwa, and I'm really, really excited to finally be sharing results from our 2024 Nigeria Consumer Protection Survey. So I'll start off the conversation with a motivation for our work. Nigeria's financial inclusion has grown from 56% in 2020 to 64% in 2023, according to EFINA's A2F survey, showing that indeed policy and industry efforts are paying off. So the work that we are doing to entrench financial inclusion is bearing fruit. But as new users are being exposed to financial services and people that previously had financial services are diversifying the way they're using these services, exposure to consumer protection risks, like William alluded to, do increase. So risks like fraud, hidden fees, inadequate redress, and indebtedness are on the rise. And what we can be thinking about is that they threaten the trust that people have in these services and can undermine our efforts for long-term inclusion. So our consumer protection survey is trying to offer some insights from the consumer's perspective on what are some of these key issues that they are grappling with, and hopefully give us insights into the key challenges and risks they're dealing with, and the nature of those risks and who is most likely to be vulnerable, and hopefully can inspire conversation on what we can do to address those key issues. So how did we collect our data? So we collected our data in person. So we went to markets across 24 states, 4 in each of the 5 geopolitical zones, the 6 geopolitical zones, and situated our team in markets, intercepting customers at random and asking them questions about their experience using digital financial services and who was eligible. So in total, we did this survey with 3,780 active DFS users. So people who had either used one of these services, mobile money, mobile agents, mobile banking, or had accessed the loan through their phone in the last 90 days. We also have a very keen interest in making sure that we amplify the voices of key subgroups of DFS users. So we intentionally try to balance our sample on gender, on rural and urban locations, and included a sample of about 20% who are vendors located in these markets. We wanted to make sure that we capture those voices loud and clear. As you can see, this study is not probably going to look very, very representative. But I hope in the next couple of minutes, I can convince you by comparing what a demographic sample looks like with what a national representative sample like the Findex study does look like. So I'm going to get into a bit of those sample characteristics. So in terms of gender, as you can see, we have nearly 50-50 split in terms of males and females, because we intentionally oversampled women versus the Findex study, which has about 60%, 61% male bias. And then in terms of education, our respondents are primarily working age adults with at least a secondary level education, which is very similar to what we are seeing in the Findex data. And most of the people that we talked to were primarily heads of households or their spouses, and the typical household they came from had about 4 to 6 members. So if you want to get a sense of, the different states that we went to, you can see them across the different geopolitical zones. So in each of the geopolitical zones, we had a sample of about 600 people. And like I said, 4 states in each. And if you're looking at the map on your right or left, depending on how your screen is looking like, you'll see the deep gray is indicative of the places that we actually went to. So I'm going to then spend some time just highlighting how the users that we interacted with do use financial services. So highlighting the services they use, and if they have challenges, the question being, do they have challenges using these services? And then where they get help when they have these kind of challenges. So in terms of usage, most users that we interacted with use mobile banking, not surprising, right? Over 77% had used it in the last 90 days, followed very closely by DFS agents or POS agents for those in the Nigerian audience, and then mobile money, which is also growing, like we're going to see in the next slide. And then you can see digital credit is not as popular. Only 5% of people had actually accessed a loan through their mobile phone. But what we can also learn from this is the fact that there are very few dormant users. So people that have accessed the service only in the last 90 days. So that is, that's exciting news, because most people actually use these services actively. So for context, most of the time series comparisons I'm going to do are going to compare results from what we saw in 2020 for the states that we have data on. So those states are Enugu, Kaduna, and Lagos. So I'm going to compare how things were in those states in 2020 to how they are right now in 2024. And what you see is that while mobile banking is still the most dominant service that people are using, mobile banking is mobile money is actually experiencing the fastest growth. So the growth rate for mobile money is really, really high, almost 34% growth rate for these states when you compare to what we saw in 2020. And when we ask consumers if they need help using the services that doing transactions on their own for mobile money and mobile banking, what we learned is good. So for the most part, many users do not need help using these services, so they can use them on their own. But for those that need help, they're more likely to be, they're about 5%, and they're more likely to be female, they're more likely to be older, they're more likely to be less educated, poorer, and less financially literate. And when we dug deep into understanding where they seek that help from, so when they have challenges and they need help, where do they run to? For the most part, people rely on their social networks. So they go to their families, they go to their colleagues for help. But what we also see is that there's a number that go to financial service agents, POS agents again. And this highlights the growing potential of agents in particular and how they can help with providing help and assistance to users who actually need this help. Now, in this section, I'm going to focus a lot more around how consumers make their choices and what informs their decision-making. And I'm going to focus on highlighting why certain groups of people, why certain consumers don't use particular services. So when we ask consumers who do not have a financial account, why they don't have a financial account at a formal financial institution, the overwhelming majority of them were because the financial institution was pretty far, they lacked the relevant documentation to open up an account, and some don't have the resources. And then the fourth issue is relating to the cost. And then when it comes to DFS agents, what we are seeing it is lack of trust, so there's a trust gap there. We also see things like high fees, people not having money, and not having agents that are close to them. So overall, what we see for these two services, access, trust, and cost, are key barriers to accessing them. And when we ask them about why they don't use mobile banking and mobile money, what we see are similar trends. So we see issues that relate to service quality, trust, cost, and knowledge barriers coming in the way of consumers accessing and utilizing these services. But another thing that we are seeing is 1 in 10 consumers who do not use mobile banking in particular do report fraud as a reason for discontinuing their usage of it. Digital credit. I think like we saw in the start, digital credit is not very popular. So many people don't use digital credit or try to access credit through their phone. But for those that do, what is coming in the way for them accessing this credit? Most of them, it's because they lack trust in these services. The services are expensive. And again, we're seeing the same issues, service quality, cost, and trust resonating across all services. So it's not necessarily concentrated towards just one service. And when we asked them, so one of the other things that we tried to look at was, okay, did you use a particular service before? And did you change, the provider of that service to go to use another provider? And what we saw is that, yes, some consumers were able to migrate from one service to another. And why? Because of issues that relate to network, issues that relate to the other provider providing a better service. So consumers are in the market thinking about these kinds of things, but also issues that relate to price and expected charges and experiences of fraud. And I think overall through this discussion, what you realize is that every time there are consumer protection failures, consumers in a way tend to move away from a particular service. So zooming into challenges, and I think this is where many people are excited to just zoom in. What are the issues that consumers are dealing with? So over the next couple of minutes, I'm going to just highlight the key issues that consumers are dealing with, and then zooming into three particular ones, thinking about the issues that people are dealing with when they're interacting with agents, zooming in on fraud, and then zooming in on indebtedness. So when we ask consumers if they had experienced any challenge using digital financial services in the last 12 months, what we learned is 84% of respondents had experienced at least one challenge in the past year. And what are these challenges? Poor network coming back again, unexpected charges, experiences with fraud, agent overcharging, which is more of perceived agent overcharging, recognizing that we don't have a cap on what agents can charge, but consumers have an expectation. So if you charge them above that expectation, they can feel overcharged, and that is what is being expressed here. And then issues that relate to how products are designed, so difficulty using an USSD code or an application, but also issues that are relating to poor quality customer care do resound in terms of what some of the issues that consumers are grappling with. And then zooming into agents in particular. So we asked consumers if they had had any challenge interacting with an agent in their last interactions. And nearly 1 in 3 do report experiencing challenges in half or more of their agent visits. So like we saw previously, agents can play a critical role in helping people that need help, but also can be a source of risk. And I think one of the things that we need to be thinking about is how can we leverage agents to be agents of help and consumer protection rather than a source of risk. And then in terms of the key issues that consumers are dealing with agents, what we are learning are issues that relate to network problems. So, you go to an agent to do a transaction and you're unable to do it because the agent doesn't have a network. Again, perceptions of overcharging, the agent lacking fraud. So you want to put money on your account, but you're unable to do that because the agent doesn't have fraud. But also issues that relate to you doing a transaction and then going back home and hoping it will arrive to where you hope it will go, but it never does arrive. And then when we go to digital credit, what we're seeing is while digital credit is still nascent, we only saw about 5% of users accessing it in total for the last 90 days and over the last 90 days. What we are learning is that they're having challenges repaying back this credit. So 37% of them had challenges paying back some of the credit lines that they acquired. And those who are at risk, most at risk, are those that have multiple credit lines. So maybe multiple credit lines of financial difficulties. And then focusing in on fraud, what we're trying to look at is the two things. One, exposure. So what is the rate of exposure overall? And then in the last 12 months. And then what is the vulnerability in terms of people falling for this fraud? The good news is that exposure, the ones that are falling for these fraudulent and scams are very, very few. So it's only 1% of them that are falling for these scams, but exposure is high. 61% have experienced at least a fraudulent attempt, at least in the experience using financial service, and 23% of those have experienced it in the last 12 months. So I think there's something to think about here. First of all, this could be an underestimate of fraud. People are less likely to tell researchers because of social shame issues about their, the fact that they have fallen for a scam or something like that. Or the other thing that you need to think about is people have to be aware of that they're being scammed for them to be able to report scams. So maybe those are coming in the way, and this doesn't need to tell us that we should take scams and frauds less seriously. And then when we look at the time series, again, for context, this is for on the 3 states that we did data collection in 2020, Kaduna, Lagos, and Enugu. When we compared the rates of fraud exposure in 2020 versus 2024, what we're seeing is a rise. So there's a rise in fraud exposure. But also what we're seeing is the fact that the fraudsters are also evolving their tactics. So they're not asking for the same things that they asked for in 2020. In 2024, they're asking mostly about personal information, while things like passwords and account details have declined in terms of how they're being asked. So fraud is always a moving target, and we have to be aware when you're crafting solutions to address these concerns. So my final thing that I'm going to be talking about is really redress. So the idea is when consumers, experience challenges, every system has challenges, no system is perfect. But when they experience these challenges, our hope is that they can seek redress. They can find recourse through the systems that are available to them. So my hope is to, answer questions around are consumers actually seeking redress formally or even in certain shape or form? And then what happens when they seek redress? Do they find recourse, at least from their perspective? And then finally, what does the outcome of the redress process, how does the outcome of the redress process affect how consumers behave in the market? So in terms of redress seeking, so the quick answer to that is many consumers that experience challenges go silent. So they don't come through our complaints management systems. Only a few have reported taking action. Only about 54% have reported taking any form of action to resolve a challenge they've experienced. So there's a significant number of people that are not taking action. And then when they take action, where do they go to? Most people that take action go to their providers directly or seek help or seek redress from an agent. Again, highlighting a critical role that agents can play. And then we see that when it comes to issues that relate to overcharging and fraud, consumers are less likely to take action. But when it involves some loss of money and things like that, when it involves some loss of money, consumers actually do take some action. So thinking about the 2 categories of where people are likely to seek fraud, one being a provider and the other being an agent. The question to ask is who's more likely to go to either a provider or to an agent? And the answer is, if you are educated and you're staying in an urban area and you're slightly older, you're more likely to contact your provider directly. But people who are less financially literate were more likely to seek redress from their agent. Again, highlighting the role that agents can play, particularly for these vulnerable and less empowered groups of people. So what happens? So we have raised a complaint. What happens to it? In our perspective, is this complaint that we raised resolved, at least in our favor, in our perception of how it's resolved? So the good news is that for the most part, most of the challenges that consumers raise are actually resolved, 61% of them at that. But resolutions that involve money, particularly, are less likely to be resolved. Only about 44% of cases where money was missing or stolen from the respondent's account were resolved from their perspective, from the consumer's perspective. 1/3 of challenges that are involving money loss were resolved. So there's something when it involves money, maybe just takes a bit of time, or at least it's not resolved in a way that a consumer feels satisfied with the resolution process. So how does this perception of redress, how consumers perceive redress, affect how they use services? Well, when consumers don't feel like the redress has worked well, they are likely to reduce their patterns of usage of that particular service. In the previous slide, we saw they migrated to other providers, but sometimes overall, they move away from the service. So again, highlighting the role that we need to be thinking about of how redress can be streamlined and worked in such a way that it facilitates consumers' interests. So I'm coming to the end of my presentation, and I want to just give you some takeaways, things that you should take home with you. One is on fraud exposure. So fraud exposure is high. 61% of our respondents have experienced a fraudulent attempt of sorts, but actual losses are low. Is that a guarantee? Is that saying that we shouldn't care about fraud? No, I would want to argue that this is just an underestimation. This is just the baseline level of fraud. And then redress. Redress systems are great, and I've worked with some of the regulators here to make sure that the redress systems can work more fluidly. But we see that many of the complaints that we're seeing, even though sometimes they can be in the volumes, are only a few of those people that are experiencing challenges. So only 54% of consumers actually do seek formal redress, come through these formal redress systems. So we need to be thinking about how do we hear the voices of the silent, the ones that are silently suffering. And then debt stress being a concern. Yes, only 5% of people are accessing it now, and it's still nascent, but growing. But people are having struggles repaying, particularly those that have multiple loans. And then I think that if you are listening to me critically, you would hear that I was emphasizing the role that agents are playing. So agents can really be POS agents, mobile money agents, mobile banking agents can play a critical role in how we work around financial consumer protection. But they also can be a source of risk. So we need to really be thinking critically on how to empower them to be sources of consumer protection rather than risk. And then to sum it all up in my last point is the value add for consumer protection. When consumers experience consumer protection failure, whether that is fraud, whether that is lack of transparency, whether that is heavy debts that they carry on, or redress systems not working properly, consumers are likely to reduce their usage of financial services, undermining the key efforts that we are putting for a pretty long time now to get them included in the financial sector. So thank you very much for your attention, and I do look forward to our deliberations coming up next.
Wonderful. Thank you so much, Brian, for that super insightful presentation. I think there's a lot to dig into here, and I'll remind you that this is really just scratching the surface. Although Brian has given us quite a detailed presentation, there's a 110-page report available on our website. So please take a look, dig through it. I'll remind you, you can go to bit.ly/IPA-CP-surveys to learn more. If that's too much for you, you can also just Google IPA Consumer Protection Surveys, and you'll find it right away. I wanted to just remind everyone to please make use of the question and answer feature, the Q&A feature at the bottom of your Zoom screen to raise any questions that you may have. I'm sure that this has raised many questions from the audience, and we'd love to make this interactive and address your questions at the end of this session. So please feel free to drop questions as you think of them. Right now is fantastic. We have received one question on the disaggregation by gender, and I can address that quite quickly. Brian may want to come in at the end to add more, but the quick answer is yes, we do this. It's all available in our report, so please take a look. In fact, we found somewhat less gender differences in terms of the types of risks that consumers are facing than we had expected. I think very few of the differences were statistically significant. Okay, so what's next? We've heard the results from IPA's Consumer Protection Survey in Nigeria. Thank you again, Brian. And now I'm really very excited to invite a diverse set of stakeholders to help us make sense of what this data means for consumers in Nigeria, for providers, for policymakers. So we're joined by an esteemed panel of experts representing key pillars of Nigeria's financial ecosystem. government and regulatory institutions, the private sector, and research and advocacy organizations. Each of our speakers brings a unique perspective on how to protect and empower consumers in a rapidly evolving digital finance landscape. I'll introduce each of them and then turn it over to questions from each of them. First up, we have Dr. Aisha Isa-Olatinwo, who is the Director of the Consumer Protection and Financial Inclusion Department at the Central Bank of Nigeria. Before this role, she served as the Acting Director of Branch Operations at CBN, where she focused on strengthening oversight of deposit money banks and ensuring compliance with regulatory standards. Next, we have Foyinsola Akinjayeju, who is the Chief Executive Officer of Enhancing Financial Inclusion and Advancement, or AFINA. She brings over 20 years of experience in strategy and consulting across Africa and Japan, with a strong record in education, oil and gas, business design, fundraising, and cross-cultural leadership in both English and French. Next, we have Uche Uzoebo, who is the Managing Director and CEO of the Shared Agent Network Expansion Facilities, or SANEF. With more than 24 years in banking, 15 of them in leadership, she's been a key driver of financial inclusion, digital payments, women's economic empowerment in Nigeria, combining strategic partnerships with impactful training and advocacy. Last but not least, we have Dr. Sunday Olaniniyan, who is the head of e-business at SunTrust Bank, Nigeria. He brings nearly 15 years of experience in banking and fintech, including roles at InterSwitch, First Bank, Union Bank, and brings a deep experience in digital banking and product strategy. Sunday also holds a PhD in comparative religions and 2 master's degrees, and is committed to pushing Nigeria's fintech sector forward. Wonderful. Thank you all. I would perhaps we can stop sharing screen, and I would invite our panelists to turn on their videos if they would like to do so. See, they already have. Thank you so much. Wonderful. Thank you again for joining us. Foyin, I'd like to start with you, if you wouldn't mind. Consumer protection, we know, is often treated as secondary to access, but we know that that's starting to change, and access alone without consumer protection can lead to reduced trust and usage of financial services. So my question for you is, what issues stood out to you from our survey findings, and how do our findings compare with the latest Access to Finance survey carried out by AFINA in 2023?
Thank you very much. Please confirm you can hear me loud and clear.
Very well.
Maybe a thumbs up. Can you hear me? Fantastic. So it's a pleasure to be here. First, let me thank the organizers, IPA, especially for putting this together. And that's because we understand, and even from the data, we can see that inclusive financial systems run on the currency of trust. We could see the data that shows that for those who had stopped using, for many of them, we could see this was impacted by issues not being resolved. So we know that trust is fundamental to inclusion, because we know that access alone is not the basis for inclusion. So access is the door, but trust is the lock. I would even say the key that opens the door to what is behind it, right? So trust is what guarantees protection, or protection is what guarantees trust, and trust is what enables people to use. And so that stood out for me. I was seeing that, of course, the data from this is specifically for those who use digital financial services. The Access to Financial Services in Nigeria survey covers all Nigerians, at least is it a sample of tens of thousands of Nigerians across different channels. So those who use informal services, those who also use digital financial services. But when we deep dive, we see consistency, that banking is leading in terms of the channel. And it's no surprise to see that there's an evolution of the relevance or of the need for financial services agents. So it is very important, but going beyond cash in, cash out services. So for our sister service, for those vulnerable groups that you have mentioned, and that's what inclusion is about. It's not just about the men or the women, but the vulnerable populations amongst us, the elderly, the less literate, those who live in far removed places. Everyone needs access. So the role of financial services agents in our sister service, in also being a channel for redress, is very instructive for me. And that's something that, for example, we'll be looking out to see as we begin to prepare for the next round of the Access to Financial Services in Nigeria survey, which is due anytime from now. Maybe another thing that I would mention is the fact that it was a bit instructive to see that the consistency in terms of why probably people can be reconsidering, certain channels. And amongst the top five for digital financial services is things like network infrastructure, network failures, also trust and affordability. So there's that consistency. When the network is unreliable, when people feel that there isn't transparency around pricing, or they feel that they've been, shortchanged, they lose trust. And then they begin to reconsider whether or not they want to go this route. So mobile banking, then you can complete that process yourself. But with agents, you would have to pay for that service. Is it any surprise, and I don't know this for sure, that we're seeing almost an equal, growth in the use of mobile banking or mobile payments or mobile money versus financial services agents? I know this was primarily for three territories because that's what we have historical data for, but seeing that it's almost an equal growth versus decline, that is mobile money versus financial services agents. But I think it underscores the evolution in the role of agents to say, yes, there's overlap in service. People are using mobile banking, they're using mobile money, they're using agents. The role of agents is evolving for our sister service, for, I'll say, redress. And so we need to empower the agents to be able to do this much more, such that every segment of our population can be included and feel included.
Thank you, Foyin. That's super insightful, and I appreciate it. And I look forward to speaking with Uche as well in a few minutes about the question of agents, because I think she's going to have some great insights on this as well. But first, I want to turn to our regulator in the room, Dr. Aisha, the director of CBN's Consumer Protection Department. So with that regulator lens, we've seen that progress in expanding financial access has also led to increases in some types of risks like fraud, indebtedness, transparency issues, redress challenges. So as a regulator, how does the evidence on these risks, including the survey data that was presented today, influence the way that you respond to these issues and ultimately aim to protect consumers?
Thank you very much. Good morning, good afternoon. I don't know timing. I'm in a very different time zone. And apologies, I tried to turn on my camera, but it's saying I should do some settings. Don't want to tamper with settings so my phone doesn't become vulnerable. So I think the presentation was very insightful, and I cannot agree but for less. Most of the reasons stated there are known, and the only reservation I have is the number of coverage, which again, are we speaking to the survey? Is it a city kind of survey or a rural area survey? So because this helps us to know how to risk-base our monitoring. But notwithstanding, I think I quite agree with the content, and we all will continue to work together to ensure that we provide the appropriate regulatory response to areas we have not responded to, and even to the areas we have responded to, would continue to improve. Thank you, CEO Elfina. I think you touch on it. Trust and confidence. So in any finance, including any relationship, if trust is eroded, then you imagine how long it will take you to bring back. In finance, it is worst because it can be systemic. So you get out of one of the institution, he may likely affect other institutions. So like you ask, what are the institutional barriers? I think majorly, as summarized in the survey, cost, access, and again, that's comfort, which is still about trust. That's comfort because oftentimes maybe consumers just assume when I even use when I get to the institution complaint, I will not get remediation. And so what do I mean by this? While we're trying to ensure that, I can also tell you and assure you that we have all the regulatory parameters on how complaints should be addressed. I think from this survey and from what we have known, we need to strengthen implementation and compliance. And in doing this, sometimes we try to use the carrot approach, but it's very evident that most times the stick approach works more. In as much as we do not want to overeat a system, but sometimes if that is the best way customers can get comfort, I think we'll continue to pursue and ensure that institutions comply with our regulatory directives. We also have directed them to always work out the root cause or causes of complaints. So we have been taking and evaluating or reviewing on a monthly basis pattern of complaints. And I can tell you from the June report, we saw improvement. Most of the complaints that came in June, over 90%, were resolved. But these are just manual reports. So we need to move towards ensuring that we automate. Not only automate, we have real-time, online real-time visibility of complaints. And also ensure that customers without internet access or customers without smartphones are also able to reach with ease the complaints platform. So the barrier again could also be part of have fragmented data. So we have a lot of data, but they're all scattered everywhere. So as industry, we will continue to bring all of this, encourage institutions to submit genuinely and openly complaints that happen, or even look out for issues that may likely cause complaints. I'll give you an example. Part of the new regulation is also directing that the POS be moved from the digital POS, from the manual to the digital POS. And this is to improve the complaint from decline transaction, because you can agree with me that we have done so much complaints across ATM or around ATM has reduced to BRS minimum, even though we want a zero complaints. But like as mentioned, you would have one or two or fewer drop-off from transactions which are manageable and can be easily resolved. Finally, we're also looking to ensure that we specifically work with the other financial institutions department, which is the primary supervisory department for microfinance banks, the mobile money operators, and so on and so forth. And because we're also seeing a lot of vulnerability coming from that, because you mentioned issues around fraud. around lack of transparency. They're so scattered everywhere. You have several units of license. I think we have almost 900 MFB license, and you imagine how, I mean, putting that together, management will become supervisory role will become very difficult, especially if we continue to manage them manually. So the bank is also looking at the subtech and the regtech, and I'm sure implementation of that with his supervision, ensure that we fully implement the risk-based supervision, and customers are well educated to know how to seek redress, and where they are not getting that comfort or they're not satisfied, they know how to escalate to the central bank. I think I will stop for now to allow other speaker contribute. Again, we also, while we're doing financial literacy, we also need a lot of literacy for banks. We have advised them to build capacity. We have advised them to also calibrate their product and services to ensure that what product offering you're giving to a target market or consumers are actually what they need, and such product or services can be better or well supported to avoid issues that would degenerate to lack of trust or confidence. Thank you.
Thank you so much, Doctor. You've covered quite a lot there, and I've made many important points, and I appreciate it. I'm already seeing a bit of a through line here in terms of the importance of trust, and I very much appreciated the focus on complaints and ensuring that complaints redress processes are effective and available to all types of consumers, because we know that complaints resolution, and we've seen from our survey data that an effective complaint redress mechanism that leads to a resolved complaint has real direct impacts on consumer satisfaction and continued use of products. Wonderful. Uche, I want to turn to you now and return to the question of agents. We know that agents play a pivotal role in the digital financial services ecosystem, both as an access point and a source of support for consumers. We also see from our survey findings that they can sometimes pose their own types of risks. So how do you see the role of agents evolving, both as the need for cash in, cash out services declines, but customer support navigating ever more complex products and services grows?
Yeah, thank you very much, Williams, and hello, everyone. I'm excited to be here. Of course, anytime we talk about agents and the last mile is something that I'm very passionate about, financial inclusion. And yes, you're absolutely right. Agents have historically been the backbone of last mile, delivering the digital financial services, especially in the cash in, cash out operations, what we know about, we all call it Kiko. However, as we witness a gradual decline in the reliance of the physical cash due to increasing digital options, the role of agents, we can't take away the role of agents, is indeed evolving and must evolve to remain relevant and impactful in this environment. So first, agents are no longer just transactional intermediaries, okay? They are becoming trusted financial guides. When Foyin spoke, and also Director Dr. Aisha, there's just one word, that trust. So the agents are becoming trusted, financial guides. As financial products become more complex, ranging from digital credits, even the insurance, which we have to bring in. Of course, we're talking about a cross-border remittance and even savings platform. Customers need more than just a place where they want to just cash out money or deposit money, withdraw them funds and all. They need hands-on guidance. They need clarity and trustworthy support, especially in underserved communities where digital literacy is quite, very low. Yes, we that we're in the community, in the urban areas, we can as well go to the financial service providers directly, but for the underserved communities, they need to transact through the agents. Secondly, this evolution requires upscaling. So an agent must be equipped with not just the technical know-how, but also strong customer service, financial literacy, and complaint resolution capabilities. So this is also where SANEF, where we come in, because these are some of the things that we do. We also ensure that, you know, continuous literature, knowledge, education, because without that, we have policies that come out every day, things change every day. We're talking about fraud, and also how much are we impacting on them in terms of knowledge. They will increasingly serve as the first responders to customer issues, no doubt, including fraud and miscommunication around digital products. So the agents play that role, especially in those communities. So we need to also equip them to have the right knowledge and guide them, you know, to have the right resources. So thirdly, as the ecosystem grows more digital, agents can serve as digital champions, educating users about safe usage, digital onboarding, cybersecurity practices, and grievance redress mechanism. I would like to mention the Sabi Money platform, which was developed with between SANEF, GIZ, and CBN. So the whole essence of that was to also have the agents go through that, go through the modules, because it has a module, and after that they become champions in various communities. They will be certified. They will have the certificate so that they cannot actually they can actually be that the bridge, the champions in their various communities. The regulators can be everywhere. They cannot be. You can't have a single staff of the regulator in the 774 local government areas that we have in Nigeria. So we'll have to use the agents to play that role. But of course, we'll have to select them. That's why they have to go through that. That's why that Sabi Money platform was put together, because their influence can be harnessed to strengthen consumer protection and trust, particularly for vulnerable users. Finally, okay, I would also like to say that it's important to rethink the agent incentive model. If the agent, so we want agents to provide more than Kiko cash in, cash out. We also want them to provide other things. We also want them to also be the champions that would also act as the first level face with the consumers. So we have to also look at ways where we can adequately incentivize them because they're investing their time in customer education for the community and the support. Because when you get to any community and they want to, even when they have problems, they will go to the agent and say, what do I do? Where do I go to? Oh, this pin, what? And it is the agent, because they trust that agent who is one of them in that community. So their influence can be harnessed to, you know, in strengthening like I said earlier, the consumer protection. But we also have to look at the incentivizing them beyond just the cash in and cash out, so that they can offer that quality customer service, and also not give misinformed information, because the agents also have other things they're doing. But if we want to also put them in this role, we really need to also look at that part. Which today, yes, most of the things that they do, they're incentivized. But when they will have to play that other part, we also need to look at all the parties involved, need to look at how we can increase the incentives that they will give them. So in summary, agents are evolving from being just that person that you go to collect cash from, cash handlers, to become critical enablers. We need to see them beyond Kiko, beyond give me, collecting that cash and all. They are one of the critical enablers of digital trust and financial capabilities. And as stakeholders, we need to support this transition, of course, with proper training, having the proper knowledge, the tools that we have to equip them with, also incentivizing them, and because a well-supported agent network remains essential in achieving inclusive and responsible financial system. Because we have this engagement with the principals, and also we also know some of the fundamental issues that they are having. And I believe if we put some of the things I've mentioned in place, we'll have a 360 degrees, an agent network that remains essential in what we do, that is just beyond money handlers that giving me cash and just depositing money. Thank you.
Wonderful. Thank you so much. I love this idea of agents being rebranded as trusted financial guides. I wrote that down. I'll use that. And it's going to be a challenging thing, but I'm comforted, at least in that seeing that SANEF is really thinking critically about how this transition will occur and what steps need to be carried out to ensure that it's successful. I'll turn, last but not least, to Dr. Sunday, representing our private sector here. And Sunday, the survey shows that many consumers are experiencing challenges recalling the fees that they pay for transactions they make. What role do you think that the industry can play in improving transparency, especially in the way that information is disclosed through a variety of channels, apps, by agents, other customer touch points? What's the agents, or what's the industry's role here?
All right, William. Good morning. Good morning, everyone, and thanks for having me here. As regards fee transparency, it's very, very critical that this aspect is got right in order to build that trust within the mind of consumers. Because we all know that a lot of Nigerians are price sensitive. Even when you have the capacity, this is not born out of the fact that maybe a lot of people are within the poverty bracket. But even when you have the wherewithal, the moment you discover that there is no full transparency around the fee or around anything that revolves around money, the trust is broken once and for all. So it then brings us to a necessary point that this transparency is enhanced within the digital financial services. And just to point to some of the things that Dr. Isa-Olatinwo mentioned from the regulatory point, I want to concur with a lot of what she has said because from the CBN standpoint, so much has been done, to promote this fee transparency within the industry with different policy mandating the banks to ensure that the fees are being known to customers at the point of transaction, listed on the website, and all other areas. Also, all these are there. But what we then need to emphasize or look at is how are these fees communicated? Are they communicated in the manner that will promote understanding for the customers, that are transacting? The language, uniformity, or how harmonized are these fees such that customers are able to recognize the type of fee they're to bear the moment they see it. I'll give you an instance. In the industry, you see situations where some service providers uses card maintenance as a form of fee, whereas from other service provider, you see something like just maybe maintenance fee. So a customer that is not well versed may not be able to reconcile this type. And then it becomes important that this is looked into. There's always the saying around the fine lines, reading through the fine lines and all of those things to get information. So it then becomes important that the provider goes beyond this and making things very obvious in the manner that will aid, easy understanding for consumers. But beyond that, we need to look at the real-time, statements of fees. What do I mean by real-time statement of fees? At the point of transaction, this I need to say is currently happening in the industry. A lot of banks, a lot of service providers already do this in the industry, but again, we need to acknowledge that it's not 100%, and it has to be. At the point of making transfer, for instance, on many of the mobile apps, you see the fee already listed. And then from there, you have an understanding of how much you're going to incur for that service. So that needs to be made 100% across all mobile banking, across mobile money, and all of that. So customer is well informed at the point of transacting of what the fee is going to be. And then it has to be stated in the way that will catch customers' attention, because it might be written in a way, maybe hidden somewhere, where the provider will be able to say, yes, I put it there. But the question is, was customer able to see it? Was customer attention called to it? So this we need to look at. But beyond that, there are other ways that we can promote this fee transparency. Take, for instance, where customer goes to their statements, their bank statement, to say, okay, you know what, I want to review the fee. I want to review how much I was charged for this transaction. And the statement, interactive enough such that I can click on a particular transaction and I see all the fee involved. in that transaction in the manner that will aid smooth reconciliation. And then I mean, as a customer, get informed about fees involved in that kind of transaction. I mean, technologically, providers can even go a step further, to embed fee calculators inside the app, where customers are able to simulate transactions ahead of consummating it, and then get informed about what fees are involved in these type of transactions. All of these things will help to get our customers well involved. But again, I also need to mention the agency parts, because like Sanef said, the Sanef CEO said, there's a lot that can be achieved through the agent. And of course, this is proven in the industry already. So now getting agents well trained is part of the requirement from the regulator. I must mention that as well. Getting them trained in the way that they are able to also educate, the customers about the fee components and all of those things. But, from this agency side, there's also that discrepancy as regards how much is charged from this particular agent and the other agent from another location. Factors for this could be access to floats, access to fund, how they were able to source the fund, and that will inform the cost. And then customer may end up experiencing different amounts from different sides. But again, the providers, the power, the service for the agent can go a step further, perhaps embedding or implementing a field where the agents are able to impute the amount to be charged for a particular transaction, and then on the receipt, the full detail of the fee is stated on the receipt. This will help to inform the customer about the fee involved in transactions, and then promote the transparency.
Wonderful. Thank you, Sunday, for those insightful comments. I think, taking this view of transparency as beyond simple sort of compliance. Are we stating the fee somewhere in the app or somewhere for customers to see? It's greater than that. It's trying to actually ensure that consumers are understanding the fees and being creative in the ways that we're sharing that information, so that it really resonates with consumers. That's very much appreciated, and it's always exciting to see that the industry is sort of serious about this type of innovation. First off, I want to recognize that we're 8 minutes past the hour already, so thank you all for staying around. And if you need to drop off now, very, very much understood, and thank you for joining. If our panelists are willing, we can also go on for just a couple more minutes and address a few interesting questions that I've seen that have come from our audience. So I'll proceed with that. But again, if you need to drop off, no worries at all. I want to start with one question that asked that the data shows that only 54% of consumers took any action to resolve their challenges, and many did not seek redress for agent overcharging or fraud. And so the question is, what barriers do consumers face when attempting to report these issues, and how can redress mechanisms be made more accessible and trustworthy? Dr. Aisha, I don't know if you want to take that question. I know that you, in your comments, you mentioned the importance of redress mechanisms. Do you have a sense of what are causing these somewhat low reporting rates?
Thank you so very much. And okay, so what is causing it basically, and I think I'm also speaking as a user, and I imagine the lower end of the segment is the costs for reporting. Sometimes it's higher than the amount you want to report. So cost may not necessarily be in terms of money. It could be if you add up all other inconveniences, like the protocol in some segment is you need to go to an agent or go to a physical branch to report. So I want to report a drop-off or a decline of 500, and you want me to take Uber. I don't know if you know Uber, a chartered taxi, or drive my car to the bank. So I think we need to simplify and encourage all institutions to simplify how customers can make complaints, but mainly for me, it's even to ensure that complaints don't happen, because the frequency can make you lose trust and you just want to just do your business outside the banking. But there are also issues that are also external. When you're trying to complain, some require court order. And the last discussion was that the courts charge above 10,000 naira. So that is also very massive or high on the other side. However, we are engaging the judiciary to see how well we can fit this into the regulation. And that's the banking regulation, just like we did for the BVN against the NIN. So we're not going to take out the court's power, but the law also permits us to make regulation in the banking system. So we can direct, or we look forward to directing banks to implement some of these basic or resolve basic issues without necessarily resorting to court order. We also have issues around bottom-up approach. So most times we just design what we think will work for the industry. I think part of your survey, we encourage you to also let us know the preference of the consumer. And I love the issue around training agent and expanding their power beyond the cash in, cash out. The worry now is who takes up that responsibility. I heard Dr. Dele, am I right? Apologies, saying it should be the regulator. The agent-principal relationship, I mean, it's very clear in law. The principal owns the agent, and so the principal has all responsibility to ensure that the agent roles, duty, responsibility, and behavior, it's mapped with the agreement. So notwithstanding, we can take on that discussion outside. And I think we're also looking at ensuring that agents are exclusive. What we have in the regulation was non-exclusivity. So an agent belongs to no principal. So that way you leave the agent too loose and unable to control, because it mentioned something about ensuring that they do a proper pricing. This is also not regulation. The principal gives the device to the agent, and all of this can be properly configured. However, we also acknowledge that we did a liberalized pricing, and I'm sure the policy was what led to the massive number you're seeing, because there are different factors across the geopolitical zone, but what we do not want is exorbitant pricing. And I think finally, communication and engagement like this, collaboration, will help us ease and also find proper and continuously improve how consumers can get remediation. We also ensure that we direct banks or financial institutions to seek approval before they launch product or services. And very, very important for us is to check that there is support for consumer, and all content are mapped out as what they will deliver to the consumer. So we'll keep working together and ensuring that we bring all he's the way consumers are served, and also after support services are rendered. Thank you.
Thank you so much. That's I think you've illustrated very, very clearly the challenges that consumers face in real terms when seeking the redress process. And I'm reminded of a survey we ran a few years ago that showed that a large proportion, I can't remember the statistic, but a large proportion of complaints redress phone numbers are not toll-free, and so consumers are forced to pay to submit a complaint. So you could imagine a quick fix would be to make customer care lines be toll-free for consumers. All right, I'll ask one last question, and Dr. Sunday, I'll give this one to you first, though others are welcome to jump in. if they're interested. And actually, we have two questions around digital innovations. And so let me ask both of those, and you can pick and choose what you want to talk about. One question is around how digital innovations can help reduce fraud and improve transparency for users. Two issues that we've seen are significant for consumers, and presumably digital innovations can help. We've also received a question on how digital technologies can be leveraged to both reduce the cost and improve the efficiency of redress mechanisms, particularly in underserved rural areas. So a broad question on how emerging technologies can help with redress, help with transparency, help with fraud. Are there any particular examples you might be able to cite?
Thank you so much, William. Appreciation once again. Quickly, yeah, I will attend to these questions, but just to mention something that Dr. Aisha mentioned. When I was talking, actually, I was actually corroborating the fact that CBN had done their part, mandating providers, the principal, to ensure that agents are trained, and I was situating the responsibility the front desk of the principal, ensuring that the agents are trained and getting things done. And of course, it's also the principal that can implement the need to ensure that the fees are made transparent to the users. Thank you for that. Now, going back to the question, William, with regards to digital innovation, how can that help to reduce fraud? Of course, it's a major task in front of all providers, all principals in the industry today, ensuring that fraud is curbed. Of course, we have these bad actors, trying everything at all time, but also it's expected for all providers to ensure that digitally we're able to use innovation to curb this. A quick example that can come to mind is I will cite one within the industry where you have a particular mobile money provider using biometrics, to reduce the possibility of fraud, in which the user is required, to do live check before the transaction are gone, and this you can configure based on maybe the time you can carry out your transactions, or based on the amount, just to ensure that it is the real owner that is carrying out such transactions. We've had the use of 2FA or multi-level in the industry for a while, but of course we keep learning more and more that there is need to beef up this and go beyond that. The use of fraud monitoring tools within the industry is also very prominent now, in which providers need to go to the level of understanding their customer behavior, such that you are able to, proactively identify when transactions are being carried out of trend, and being able to step in immediately to prevent such fraud from being carried through. So these are some of the steps that providers are looking at. And of course, there's also the need for collaboration. And I'm aware even NIPS is doing so much in terms of, bringing in technologies to help curb this, looking at, the aspect of blacklisting, the aspect of, background check and all of those things, even right from the point of onboarding any user within the system. So all of these things are coming together to ensure that the consumers are protected, the funds, people's deposits are protected from fraud. So this is very, very key. And also to talk about the redress part of it. Again, I will also default to CBN, saying CBN has gone to the extent of saying that, okay, you know what, rather than waiting for the claim or waiting for the complaint to happen, we want a situation where a transaction has failed. We want this transaction reversed within 5 minutes. This is the extent to which the regulators have gone, and which the providers are implementing. But of course, there will be time when there will be complaints, and what providers are expected to do is to have digitalized this process in a manner that you have, form within your app that customer can either click on transactions and then immediately submit the complaint for that particular transaction, or even if it's going to be an open field where customer can just click on to submit complaint by inputting full details as regards to what the complaint is about. I've seen some providers that are implemented this as like a post office service where customer can freely type in the complaint and then submit it. But again, what is very, very important is to ensure that the providers have manpower behind the application who will attend to these complaints and ensure that those aspects that have been automated are treated as expected. So it's very, very key. The solutions are already within the industry, just that we need to ensure that it's implemented 100% across board.
Wonderful. Thank you so much, Sunday. I think those are critical points, and I appreciate the need to, as we continue to automate and make use of new technologies like AI and chatbots to keep humans in the loop and ensure that we're not sort of handing things over to chatbots that can do some good, but also not resolve every single problem. So it's a combination is really where the solution lies, it seems. Wonderful. With that, I think we can wrap things up. Thank you all for staying on a bit longer than the 1 hour planned. I think this was a really engaging and valuable conversation. Thank you to all 4 of our speakers. Aisha, thank you. Foyin, Uche, Dr. Sunday as well. Thank you so much for offering your insights. Brian, thank you for the insightful presentation on the survey. We look forward to continuing this conversation, and please feel free to take a look at the reports, read the whole 110 pages. There's lots of insights there, and reach out if you'd like to speak with us about any of this. Thank you so much, and have a good rest of your day.
Thank you. Take care.